All right, now in this video, what I'm going to do is I'm going to give you an explanation of how this trading approach works. So I'm going to call this the trading concept. Now, we're really going to look at how pairs move in relationship to other pairs. And we are going to use this movement to our advantage. Now, if you're not necessarily new to trading, you will know that most often when a person is getting ready to do a trade, they are trying to determine, is the price going to go up in value? Is it going to go down in value? Or maybe even if it looks like it's going to go what's called sideways. Now, these people will have charts, and on these charts, they'll have various indicators and various things to try to help them to determine or really guess which way the market is going to go. Now, this approach that I'm going to be teaching you has nothing to do with any of that. We don't have to guess which way the market is going to go because we're going to position ourselves a certain way. And we're going to use certain pairs and certain pair combinations so that we don't have to guess which way the market is going to move. And we can literally set the trades up, and it's really almost a set it and forget it type approach, but it's not quite a forget it approach. You can set it, but you don't want to necessarily just forget it. So let me get started here. So we're going to look at the Euro US dollar and the US dollar Swiss franc. And if you look at these two charts, you will see that the Euro chart, it at the top, it shows price is pretty much moving towards the downside. While you also notice that while that Euro US dollar is moving to the downside, typically the US dollar Swiss franc is moving to the upside. Now, these two pairs have correlated like this for decades. So what we're going to do is we're going to use this to our advantage. Now, while it's not exactly the same, while the charts are not exactly the same in terms of one is moving down and one is moving up, what we want to look at is how the charts actually look. So if we start over here, we'll notice that the US dollar Swiss franc, it was moving up and then it kind of went flat a little bit. Well, over here you'll notice that the Euro US dollar was moving down and then it kind of went flat a little bit. And then it moved on down again. And you'll see that the US Swiss franc moved over. It did dip down a little bit, but then it started to go up a little bit. And then we have our long candles here, which both currency pairs had a move in the opposite direction and so forth. So we're going to use these little differences to our advantage. Now, let me show you the next slide. Now, the next slide is the Euro Japanese yen and the Swiss franc Japanese yen. Now you'll notice that these two charts look very similar, identical. If you look here, we have the same type of movement up here on the Euro Japanese yen as you do down here on the Swiss franc Japanese yen. So we are going to use these similarities to our advantage. Now let me show you how we're going to use these. So let's take our Euro US dollar and our US dollar Swiss franc. The little green lines here that I have on the chart, these are going to be representative of where we would set up an entry. Now, I've exaggerated this just a bit just so that you can see it more clearly. But because these two pairs move in what I call the opposite directions, meaning if one pair is moving to the upside or increasing in value, the other pair typically is doing just the opposite. So if you remember on the previous chart, the euro was moving to the downside while the US Swissy was moving to the upside. Now, the green line here, this would be a representation of where we would put an entry. So we would not do what's called a market order. We would do a pending order because we want price to show us some momentum and move to us. So what we would do for these two pairs is we would set up a sell order. Now, granted, this can be a buy order or it can be a sell, but we would set up a sell order on the euro US dollar, and we would also set up a sell order on the US dollar Swiss franc. The reason we are going to do this is if the euro continues to decrease in value, the next candle, or maybe even this candle, would turn red and it would break through our green line. That would trigger our trade, and now we have an order that is actually making us money, or a position that is actually making us money. Now remember, if price does move down on the euro, typically price will always go up on the US dollar Swiss franc. So what that means is price would show us a upward movement and we would have a blue candle. Our green line here, price would never breach that. Therefore, we would have one trade running up here on the euro. We would have a US Swiss franc trade that never triggered. That means we didn't have to guess, is price going up or down? We positioned ourselves strategically so that if price went up, we would make money on one pair. If price went down, we would make money on the other pair. So if price went up on the euro, meaning it would move like my arrow is, up, then the US Swissy would typically move down. It would trigger our entry right here at the green line, and now we would be making money on that particular pair. Hope you understand this. Now let's look at the other pair. So the euro Japanese yen and the Swiss franc Japanese yen, because they move pretty much in the exact same directions, we would not do a buy order and a buy order, meaning a buy order here and a buy order here. Reason being, if price, as an example, let's say we did a buy order here and we have a buy order, so we would have a green line here. If price continued to move to the downside, neither pair would trigger an entry. So because they move pretty much in the same direction, we want to do a buy order on one of them and a sell order on the other. Now it doesn't matter which particular pair you do the buy, which pair you do the sell. That does not matter. You just want to make sure that's what you would do. So as an example, we would look at current price and we would set up our trade based off of that. We would look at current price and we would set up the trade based off of that. Now, in the next video or a video after that, I'm going to actually go through an actual trade setup so that you can understand exactly how to set the trades up and how this approach works. Now, I do want to go back to the previous slide because you may be wondering with the euro US dollar pair and the US Swiss franc pair, well, if they move in opposite directions, why wouldn't you do a buy order on one and a sell order on the other? So as an example, if we know that the euro is typically moving down, why not do a sell order here? And why not do a buy order on the US Swiss franc, because we see it's moving up. Now, I understand why you would think like that. The reason why we would not necessarily do that is, let's say we did enter a buy order here at the US Swiss franc and we did a sell order here. Well, if price starts to move down and triggers our euro trade, and then price would be moving up, which would trigger our US Swissy trade, but then it suddenly reversed, now we are going to be losing on both trades. That is what we want to prevent as much as possible. Now, there are situations where you'll have what I call a double tap, meaning price will move down, it will initiate the euro US dollar trade, and then it will move in the opposite direction and start to move to the upside, which then means the US Swiss franc would come down and trigger as well. But I do have safeguards built into the approach so that if something like this does happen, we will position ourselves accordingly so that our trades will do what I call recover themselves. Meaning, if we have that double tap type of a situation, we will have other trades that recover the loss and actually create us a profit. So, and I'll get into that when we actually set up the actual trades, and I will give you some examples as well so you can see how this process works. So that's what I wanted to show you here from the concept standpoint. We're positioning ourselves based off of how currency pairs react with each other. Now, I do want to warn you of something. You could take a look at various currency pairs and charts, and you can see similarities. There's something a little bit deeper as to how you select them. Just because a pair moves pretty much in the same direction as another pair or opposite, it doesn't mean necessarily that those pairs are the right ones to use together. There's some other factors involved. But I just wanted you to understand the concept of what we're doing. And when you get into actually practicing this, you're going to find that this is absolutely amazing. If you are a veteran trader and you've been trading for a while, if you look at this, you can actually utilize this even in some trading concepts or approaches that you're using. But we're not going to focus on other approaches right now. We're just going to focus on what you've invested in right now. So that's all I have for you on this video. I want you to head on over to the next video now.